As you know, we put a 50% tariff on India on oil. They're the second largest. They're very close to China in terms of the purchase of oil from Russia.
Why are you singling India out for these additional sanctions?
It's only been 8 hours. So let's see what happens over the next.
Sanctions.
You're going to see a lot more.
So this is a taste.
You're going to see a lot more. You're going to see so much secondary sanctions.
President Trump doubles his tariffs on India over its Russian crude oil imports and also puts China on notice. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge.
Trump set to impose a 100% levy on chips unless they are made in the USA. Apple securing an exemption by committing to a $100 billion investment. TSMC, Samsung and SK Hynix also set to receive exemptions from the 100% rate, sparking relief across Asian markets. KU Law's Raj Bhala will break down the legal aspects of Trump's tariffs for us. Plus, India's former ambassador to the WTO, Jayant Dasgupta, shares his perspective later on. Also ahead, we get the markets outlook with Crossmark Global Investments Chief Strategist Victoria Fernandez and more on the business impact of chip tariffs with Sudhir Chaturvedi, Global Chief Global Officer and North America CEO at NTT Data. We're counting down as President Trump's global reciprocal tariffs are due to come into effect in the next hour. But he's still surprising markets with fresh levies. This time, it's plans for a 100% tariff on chips imported into the U.S., but with exemptions for companies moving production locally. The president making that announcement in the Oval Office alongside Apple's CEO Tim Cook as a tech giant commits to a further $100 billion of investments in the U.S. Trump also doubling his tariff on Indian goods to 50% over ongoing purchases of Russian energy in the latest escalation with a key Asian partner. The new rate will stack on top of the existing 25% tariff to come effect in the next hour. Trump says the higher duty will then kick in within 21 days. Well, India's foreign ministry quickly responding to the additional tariff, saying it's extremely unfortunate for the U.S. to punish India for actions other countries are also taking. For more on the so-called reciprocal tariffs, we're joined by the prominent figure in the field of international trade law. Raj Bhala is Distinguished Professor at the University of Kansas Law School. Professor, good to have you with us. I'm just wondering, what's your take on the tariffs we keep saying, including the one today, 100% on semiconductors?
It's an honor and pleasure to be with you. Thank you for having me. My overall take is that the United States is pursuing a policy of xenophobic autarky. And what I mean by that is the United States does not trust foreign countries, whether friend or foe, for supplies of industrial merchandise, agricultural goods. And so it is distrustful of those foreign supply chains and trying to onshore and reshore as much production of everything from rare earths to chips to manufactured products as possible. And that's the autarky part. Autarky, of course, in trade speak means no trade. I don't think we'll ever get to a no trade position. But it's a change of eras. This is not an era of change. It's a change of...
Let me just jump in here to bring you some headlines out of China. This has to do with its trade numbers. China, July exports in USD terms rising 7.2% year on year versus an estimate of 5.6%. Its July imports in USD terms rising 4.1% year on year versus estimates of minus 1%. Professor, it does seem like China's trade numbers are looking pretty strong, exports beating expectations. Let's jump in here and talk about how perhaps countries are seeing some kind of resilience, especially for China.
Well, what you're going to see is continued trade diversion away from the United States. When the U.S. puts on reciprocity tariffs, as you rightly pointed out, within the hour of significant numbers, double-digit, high double-digit, of course, in India's case and Brazil's case, what countries will naturally do is look for other markets to which to export. That will include China. That's already included Indonesia. It's including Canada. In fact, what we're seeing are many countries pursuing, even India, pursuing free trade agreements to try and secure or at least make up some of the market that they expect to lose in the U.S. I mean, look, we all know that when you raise tariffs to a certain level, beyond a de minimis level, which is what they have been, 2.3% has been the average applied most favored nation rate in the U.S., and now they're going to go to 15.2% in about an hour. The obvious incentive is to find new trading partners, and that seems to be what the U.S. actually wants.
Trade getting redefined as we speak. Let's touch on the 100% tariffs on semiconductors. How will it impact countries like India, which is already making plans to produce the iPhone with the likes of Apple?
It's really bad news for India. I mean, India has been Exhibit A in the China Plus One strategy, or maybe Exhibit B after Vietnam. India's tried to lure investment out of China, and the U.S. had traditionally been encouraging that in the Biden administration, for example, and perhaps earlier in the first Trump administration. And now all those plans for brand spanking new semiconductor plants in India, Apple, say, well, they're going to put out output that will get 100% tariff in the U.S. So they'll have to find someplace else to ship. Or perhaps the CEO, Tim Cook, will move that what was going to be in India, move it to the U.S.
Professor, we know tariffs will kick in under an hour. Are we clear how they work? Because even Japan got kind of confused with regards to its own tariffs.
Yeah, that's a great question, because throughout the first 200 days of the second Trump administration, dating back to Inauguration Day, there's been a clumsiness, a sloppiness in terms of rolling out tariffs. There's been a non-transparency. You see an executive order, but it'll be incomplete. It won't give all the details. It might not talk about some certain key aspects like warehouses or foreign trade zones or privileged foreign status, stuff that is really important for importers and exporters alike. But now, to the administration's credit, this executive order that was issued today is pretty clear. It's pretty clear that all Indian merchandise is going to be covered, with a few exceptions that are identified, and that the tariffs, reciprocity tariffs, will be the 25% plus the 25% secondary boycott tariff on Russian oil. And then there will be separate, not stacked on top of these 50% reciprocity tariffs, but separate Section 232 tariffs, national security tariffs, on steel, steel and aluminum derivatives, autos and auto parts, copper, and now, as we know, the 100% one on chips. And then there is an annex dating back to the Liberation Day tariff order, which has some other products that are exempt.
Trump hailing the tariffs as a victory. He says it'll rake in trillions of dollars for the U.S. Is that true? Because isn't it contingent on the level of trade? And given the high tariffs, I'm not sure if the imports into the U.S. will be in huge numbers.
Exactly, exactly. I mean, it's a simple formula. Tariff liability equals the product of the tariff rate times tariff valuation. Well, if the tariff rate is high enough, it creates that disincentive to import into the United States. It also creates an incentive, which can be illegal, to understate the tariff value by, for example, manipulating the first sale rule, possibly transshipping through third countries, which again is illegal. And so the prospect of the U.S. Getting significant new tariff revenue to pay for its massive budget deficit or to bring down significantly its debt is really unlikely. Again, I'm a law professor. I'm not a market prognosticator, but I would be surprised to see if customs duties rise to the level that the president might like them to.
So given that you're a law professor, are the tariffs legal under international law, or U.S. law for that matter?
They are illegal under under international law. The basic two principles that the reciprocity tariffs are violating is first the most favored nation rule in the General Agreement on Tariffs and Trade, GATT Article 1. And that rule says that on like products, the same tariff must be charged to all shippers of like products. It's sometimes nicely to put as love all your neighbors equally. You got to love them all. You got to trade them all, tariff them all equally. So 10% on India, 10% on Pakistan. And I use that example deliberately in a second. You'll see why. If it's cotton, right? Well, Pakistan's now going to get 19%, and India is going to get 50%. That's not going to make them happy in Delhi, obviously. So that rule is violated. The second rule that's violated is the GATT Article 2 principle of tariff bindings, where it's basically keep your promises. Once you agree to bring down your tariff, say to 2.3%, or 2.5% is on cars in the U.S., keep them there. They're bound. It's a ceiling rate. Well, the U.S. is blowing through its bound ceiling rate. So that's a second violation. Now, these two core principles were ones that the U.S. championed in as early as 1941 with the Atlantic Charter, and certainly in 1945 with some of the working papers the State Department put out about the founding of the GATT. Are there any exceptions that the U.S. could look to? I would say no. It cannot look to the Article 12 balance of payments exception. It cannot look to the Article 24 free trade agreement exception. And it cannot look, I think, to the Article 21 national security exception. Now, the second part of your question is, are they legal, the reciprocity tariffs under U.S. law? That question is being discussed right now in the U.S. courts at the appellate court level, at the Court of Appeals for the Federal Circuit in Washington. The question is, does the president have power to raise tariffs under the applicable statute? And is his justification for doing so, trade imbalances, trade deficits, an unusual and extraordinary threat to the U.S.?
Multiple violations under international law. The question is, what's the recourse for countries? What can they do? And can the WTO even play a part in this? Yeah,
another superb question. Well, so if India, and for that matter, the European Union, and Switzerland, and so many other countries had adhered to their rhetorical attachment to multilateralism, none of them would have negotiated with the United States. They all would have gotten together in Geneva and said, you know what? None of us is going to cut a deal because it'll undermine the MFN and tariff bindings principle. That's not what they did. They did not act collectively. Rather, they raced to the White House to sign the best deals they could get, thus facilitating the undermining of the GATT WTO principles. Now, how could we see those rectified in Geneva? Well, a country, let's say China, could bring a suit against the WTO. Against the U.S. at the WTO, saying you violated these principles. In fact, there are such suits kind of in the works. The problem is, thanks in part to U.S. blockage of appellate body members at the WTO, there's no functioning appellate body. So let's say the U.S. loses the suit, and I predict it would lose that WTO suit, then the U.S. would appeal to a non-existent appellate body, and it would go into a legal limbo where it would remain indefinitely, and the U.S. would continue to perpetuate the violation.
Great perspective, Professor Raj Bhala, Distinguished Professor at the University of Kansas Law School. Thank you so much for being with us today. And for more insights on Indian trade, subscribers can join in a live Q&A with our panel of experts at Bloomberg. Log on to Bloomberg.com at the times listed on your screen to participate. Still ahead this hour, we talk market strategy as investors assess the latest Trump tariff hikes and threats. Crossmark Global Investment will be joining us next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Let's get perspective on how markets are digesting Trump's latest tariff threats with Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Victoria, good to have you with us. It does seem like markets are just shrugging off those new tariffs because they're now focusing on earnings. For better or worse, you think?
Yeah, I think that's true. And I mean, it's better if earnings continue to do well. And if we see profit margins continue to do well, that's really what's been holding up so much of the U.S. economy is we continue to get good profit margins, which means we don't have to have layoffs and we don't have consumers pulling back tremendously on spending. We've had a little bit of a slowdown, but we haven't seen a tremendous amount of pressure. So for right now, you're right. The market is just kind of going. And here in the U.S., we had a lot of announcements about tariffs and new things coming on, and the market did kind of shrug it off. At some point, I think that'll have to come back full circle. The economy will have to take all of this into account and see what's happening. But for right now, they seem to be skating through it.
So right, the momentum for the moment, but Goldman Sachs came out to say that, you know what, investors are kind of like underpricing perhaps the possibility of a recession currently standing at about 30%.
Right. The probability was much higher earlier in the year, obviously. Right around Liberation Day, we had a much higher probability of recession, and that has come down. But I do think the market is ignoring some of the warning out there. You know, we've been talking with clients all year. Some of those headline numbers were saying, when you kind of dig down into some of the other numbers, we could see that hiring was slowing. We could see that continued claims were going longer. And so we knew that things were slowing down. And I think you're right, and Goldman is right in saying that some of that is being ignored right now, and it's being underpriced in this market. For that reason, it's one of the things that we tell our clients. It's why we're still a little bit cautious when we put money to work. We don't want to sit in cash, but we also don't want to go full on growth and full risk on in portfolios at this time.
Why not cash? We had some investors tell us the time now is to keep a fair amount of cash. You get, what, 4 to 6% returns? Ain't too bad, given all the noise out there.
You're right. It's not bad at all with in your portfolio. That works well. But it's also very difficult to try to time the market exactly on when to come out and when to go in. It's usually a fool's errand. So we would prefer to have a little bit of cash on the side, but really put most of our money to work. You can get the same type of returns when you look at short-term treasuries as well. And if we think the Fed is going to lower rates later this year, then you're going to have kind of that bull steepening happening, and the short end of the curve would be a good place for people to be in order to gain some of that advantage.
Victoria, we had 100% tariffs on semiconductors with some exemptions. Trump has carved out some exceptions there. I'm just wondering, does it change your perception on your tech play? I mean, would they be less attractive now?
be very careful with this year because growth expectations have been so high in those areas. Earnings expectations have been really high. And so we've been a little bit concerned. We've been looking at maybe some of the other tech names like a Cisco or names like that aren't part of that big Mag 7 component. Although you have exposure there, we were looking for other areas. Now you have an opportunity for some of these companies. Texas Instruments, NVIDIA is part of it, TSMC, and some others now that say since they're going to be building in the U.S., they're going to be exempt from some of those, Apple being the most recent in the latest U.S. session, talking about that extra $100 billion they're going to put to work, part of that right here in my hometown of Houston. So I do think you have to look at tech a little bit differently, knowing that they're going to be exempt. Also be cautious at the valuations of these tech companies. They're quite stretched, and they're going to have to continue to have really strong earnings and profit growth in order to support those valuations. So have some exposure, but I would be cautious about putting too much weight in that allocation.
What's your biggest bet for the next 12 to 24 months?
Oh, that's a good question, Haslinda. Our biggest bet, one of the sectors that we've really liked, and it's because they continue to be in an uptrend, and if we get a steeper curve, it's going to be beneficial, and they have strong balance sheets, is the financials, especially those larger banks. We consolidated a little bit as of late, but I think when you're looking at benefits coming out of the reconciliation bill that passed the U.S. Congress, CapEx is going to go high. Loan growth should go higher. If you're going to get rates coming down, are all things that are beneficial to some of these larger banks. And again, they're sitting in a position with really strong balance sheets. So we really like financials. We've liked them all year. I think that'll continue to be a sector that we like going forward.
Just one final question before we let you go. What's the risk that you're most concerned about?
You know, one of the biggest risks I think that we have to look at is earnings not living up to expectations. We saw earnings expectations get lowered coming into the second quarter, but because some of the tech names were doing well, they've actually started to raise expectations for the third quarter, and that makes me really nervous with tariffs coming into place. We saw ELF Beauty with their profit margins cut 30% in their earnings release. If we continue to get profit margin cuts like that, sustainable at the levels they're at, and that's going to cause trouble for the labor market and the consumer. So that's what I think our biggest risk is.
Victoria, thank you so much for that. Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Let's do a recap on China's trade data for July. It does seem like exports coming in stronger than expected. In terms of USD, exports rising 7.2% year on year. The estimate was for 5.6. China July imports in USD terms rising 4.1%. The estimate was for a contraction of about 1%. China's July trade surplus coming in at $98.24 billion, and the estimate was for $104.7 billion. So China's export growth unexpectedly quickening despite those U.S. tariffs. Well, still to come, we explore how shifting global trade dynamics are impacting NTT Data's business in an exclusive interview with a North America CEO, Sudhir Chaturvedi. Keep it here with us. This is Bloomberg.
In addition to the American Manufacturing Program, we're also significantly growing our investments in AI, including expanding data center capacity in North Carolina, in Nevada, in Iowa, in Arizona, and Oregon. So we're going to keep making investments right here in America. We're going to keep hiring in America.
Apple CEO Tim Cook announcing a plan for $100 billion of investment in the U.S., speaking in the Oval Office alongside President Trump. This includes a new manufacturing program designed to bring more of Apple's production to the U.S. and is top of an earlier $500 billion spending pledge over the next 4 years. Apple's investment in the U.S. will help the tech giant avoid Trump's planned 100% tariff on chip imports, and Asian chip makers are also trading mostly higher as regional governments say top names, including TSMC and Samsung, will be exempted from the new levy. Taking a look at where we are in terms of TSMC, currently up by about 4.5%. Of course, TSMC ramping up manufacturing in Arizona. NVIDIA, AMD all depend on TSMC for their chips. Samsung building out a foundry in Texas, and Samsung currently trading up by about 2%. So beneficiaries from what Trump announced just earlier today. Let's bring in our next guest, a senior executive at digital business and technology services company NTT Data. Sudhir Chaturvedi is their global chief growth officer and North America CEO. He's visiting India this week to meet NTT clients. Good to have you with us, Sudhir. Your take on that 100% tariffs on semiconductors, how are you viewing it?
I think, what we see is that, frankly, massive investment in technology which will drive AI in the future. It's great to see this investment happening globally. This fuels growth for all of us in the tech sector. We are the third largest data center provider in the world, so this is a good news for us all around. So yeah, we welcome all investments in technology wherever they might be.
Is it realistic for the U.S. to want to onshore chip production?
Well, I think it is a capital-heavy industry, and it is something that requires land and power. And I think it is, if in the right model, I'm sure it can work in any part of the world, including the U.S. It's not my area of expertise, frankly, but it does have a direct impact on the tech sector. As I said, all investments in technology are welcome because it drives a virtuous cycle of growth for all of us.
The thing is, it's bound to shape, influence the tech industry. What impact do you see?
Well, I think what we are seeing is that, there is a very significant investment in technology across the board. We call it the full stack of technology, whether it's network, it's data center, it's cloud, it's security, it's digital technologies, it's traditional applications, it's business process, even consulting. We are seeing that across the board, clients are investing in technology. We call it the full stack. I believe that, in the 6 months that I've been here, that NTT Data is the only full stack company in the world because we operate networks, data centers, and provide the full gamut of IT services. So I think for us, what we see is, this is fundamental investment in infrastructure that will drive AI in the future. And therefore, all parts of the stack will benefit from fundamental infrastructure investment in technology. So that's why I said, it's great news all around.
We know that you've been expanding your data center footprint around the world. Might it mean additional costs for NTT Data, for instance?
Yeah, I think, as I said, data center capacity all over the world is increasing as both, whether it's technology companies, it's the cloud service providers, or it's enterprise companies are investing significantly to upgrade their digital infrastructure. Data centers is one part of it, which is driving, the current growth. But we see significant investments happening all around this ecosystem in order to, clients are now looking to move from doing proof of concepts which are related to AI to actually doing full-scale AI in production, and that requires the infrastructure, the digital infrastructure to be modern and to be able to handle that kind of change in technology. And it's going to be great because it will drive new business models, new revenue models, change the way corporations work today.
You've been meeting clients in India. What's the sense on the ground? India's been hard hit by Trump tariffs, and today we saw a doubling to 50%.
Yeah, I think, when I meet clients in India, what we are seeing is a great deal of optimism. The energy in India is palpable. What we're seeing, significant economic growth. But most importantly, India has always been a strong hub for technology, so that will always continue. I think that from a tariffs perspective, what we'll see is that things will start to settle down towards the end of the year. These are, various negotiations that are taking place all over the world. Our clients are actually focused on the market opportunity that is there today. And when we look at India, it's not just it's a combination of three things. It's India for India, India for the world, and India for technology, sort of native technology investment in the startup ecosystem. So I'm meeting clients and partners across the board here, and frankly, working with them, learning from them. India is the epicenter for technology today, and it's very important for us at NTD Data. So it is a critical part of our operations globally. So it's always a pleasure to be here.
But are they willing to keep spending, keep investing as they look ahead, or are the tariffs perhaps, holding them back?
Yeah, I think what's happened, clients, if we look at, in fact, as Chief Growth Officer, I have a view of clients globally. And what I see is across the world, today corporations are in a strong shape. If you look at the balance sheets of corporations, over the last 2 years, they've really shored up the balance sheet. So the appetite for investment remains. Yes, there is a bit of an uncertainty in the environment. It is quite a dynamic macro out there. So there is a bit of slowdown in decision making. I would accept that. We've seen this in our large deal pipeline. So we have a record large deal pipeline, and we are seeing that deals are getting pushed a little bit, maybe moving from one quarter to another, but we still see a record pipeline. So I think there is a bit of a time lag right now, but what we are seeing is fundamentally very strong balance sheets and a very strong appetite for spending in the future.
Talk to us about how important India is as a region when it comes to your global plans.
Yeah, we are the largest data center provider in India. In fact, if you would notice, we recently also launched a submarine cable called MIST, which connects Malaysia, India, Singapore, and Thailand. It's also our global IT services hubs, with over 45,000 people now in India across our various functions. So it is for me, we're creating a global large deals hub, which I'm working on personally. This is the reason why I'm in Mumbai, Bangalore, and Pune on this trip. So very critical for us, as I said, from all three dimensions that India provides for us.
We know that for Q1, your operating profit missed estimates. Any clarity how you might do for the quarters ahead?
I think, we always, from a financial perspective, Q1 tends to be soft across the board. What we are seeing across all our businesses is good momentum. So you'll see that we're laser focused on growth as an organization. It is our number one priority. My mantra is that growth solves all problems, and that's really what I'm focused on. We'll start to see an uplift, as in the coming quarters, and it's, I think we're seeing, in fact, if we look at our recruitment plans for people as well as our pipeline, we're very confident that we'll continue to pick up momentum through the rest of the year.
Where will you see the most growth? Which regions, for example?
I think we will start to see growth in North America in the second half of the year. I believe that things, will settle down from a business decision-making perspective towards the latter half of this calendar year, and we should take that momentum into, the Q3 and Q4 quarters for us. So we are April to March, financial year for us. We're also seeing strong growth, coming back in Europe as well. We recently, for example, some of our AI announcements that we've done with OpenAI, with Mistral AI, as well as Salesforce, and our continued partnership with Microsoft. Today we're launching a Microsoft Global Business Unit, which is focused on AI. So combination of what we're doing in markets, especially in North America and Europe, as well as what we're doing with global partners and with our AI partnerships, I think those are the prime drivers behind our growth today.
Sudhir, thank you so much for that. Sudhir Chaturvedi, Global Chief Growth Officer and CEO North America at NTT Data. While staying with AI, shares of AMD gained in after-hours trading in New York as investors reacted to President Trump's plan for a 100% tariff on chip imports. Earlier, its earnings report offered a little clarity on when AMD might resume sales of key AI chips to China. CEO Lisa Su told Bloomberg she's optimistic about progress toward a resolution.
I know people always want precision, and what I will give you is exactly how things are playing out from our standpoint. I think we've seen an improvement over the last 90 days. 90 days ago, we did not expect to be able to ship to China because of some of the regulations. I think this administration, the Department of Commerce, the government has actually been very open to trying to find the right balance between national security and ensuring that we have U.S. AI technologies proliferated across the world. So we think that's a great balance. We now know that we have a number of licenses that are under review. We've been given good indications that those are moving through the review process. And we will certainly inform everyone when the licenses are granted. But given that it's hard to predict exact timing, just given all of the things that are in front of the government at the moment, we thought the right thing to do right now is just say, hey, let's not include that in the third quarter revenue. But even with that, we're growing 28% year over year, which is, fantastic growth rate. And if you asked me, what we've learned in the last 90 days, we've learned that the demand is even stronger in the second half of the year than we necessarily, thought maybe just a few months ago.
And analysts really corroborated and thought it was right that we should see such caution perhaps and not show up in the numbers. But Lisa, I'm interested in the inventory that you had been very clear about, the $800 million knock on the fact that you couldn't access China for a while. I know that most of those manufacturing hadn't been complete, but do you think you can unwind that $800 million? How much do you think can you bring that back to bear?
Well, we certainly expect that once licenses are approved, that we will, restart our supply chain and, get those in place. We do have, a bit of time that it takes to complete those, but we would expect to be able, to ship some of those products as licenses are approved. And, again, the exact timing will depend on when licenses are approved. But I, again, would hope that we don't get caught up in, something that I would say is moving actually in the right direction. And really see the overall business is doing extremely well.
And that was AMD CEO Lisa Su speaking with our colleague Caroline Hyde there. Keeping it to tech, let's do a check on how Sony's doing right now, reversing earlier losses, gaining as much as 7%. Sony lifting its outlook on the entertainment demand despite those tariff threats, raising its earnings forecast after a strong showing from its entertainment divisions that outweighed the threat of new U.S. tariffs on chips. Sony currently up by about 6% as we speak. Now, coming up, a closer look at India-U.S. trade dynamics as President Trump hikes tariffs on Indian imports to 50%. New Delhi's former ambassador to the WTO, Jayant Dasgupta, will be joining us next. This is Bloomberg. India's just kicked off its trading day. Let's do a check on how they're doing against a backdrop of heightened tariffs. Remember that Trump has doubled the tariffs on Indian exports to the U.S. to about 50%. We're seeing pretty much red across the board for the benchmarks in India. Sensex down 0.3%. Well, our next guest has close to 40 years of experience in various sectors of India's government, including serving as India's ambassador to the World Trade Organization. Jayant Dasgupta joins us now. Ambassador, good to have you with us. Give us a sense of, the mood in India right now, having been slapped with one of the highest tariff rates in the world by the U.S.
Well, India looks upon the U.S. as a very dear friend, and there are relationships which stretch back to more than a century. My own grandfather got a PhD from Harvard in 1915. So, there are relationships which have endured. They are business relationships, political relationships, relationships which encompass the security framework, and of course, educational and social ties. So this action of the present administration of slapping about 50% tariffs has appeared to most Indian people as unwarranted and unjustified. Also in the backdrop of the very positive offers which India had made across a wide swath of products, industrial products, as well as a large number of agricultural products. So the feeling is one of disappointment.
There have been intensive negotiations, yet here we are with a high tariff level. What went wrong? Is it a case of India having red lines, agriculture, dairy, for instance?
Well, if you look at the total tariff universe of about 12,000 tariff lines at the 8-digit level, which India maintains, how many of them relate to dairy? Barely 30 or so. So this question now, which the Trump administration has raised and is targeting India, is not one of dairy or soya and corn. It is about not buying Russian oil. And aligned to that is the second question, which is lurking in the background, about not buying arms and ammunition from Russia, about diverting everything and buying from the US. And the third thing, which is also there, in the background, but could emerge, is that the U.S. administration currently views the BRICS as an anti-U.S. coalition, which is out to de-dollarize the global trade arena and financial dealings. And it has been mentioned, I think, by the president himself, that BRICS members can be subjected to additional tariffs. And so there is no end to what could be a consideration for slapping additional tariffs. In the case of Brazil, BRICS member, it has been done because there is a perception in the present U.S. administration that the current administration is inimical to ex-President Bolsonaro and is not giving him a fair deal. So where does it stop? It is not really confined to trade issues. It's gone much beyond trade.
So what concessions will India be willing to make? I mean, we know that when it comes to Russian oil, India started buying discounted Russian oil only in 2022. There are other options for India.
Well, India didn't buy oil from Russia on its own, and not because it wanted to do a favor to Russia. It was Janet Yellen of the Biden administration. It was the U.S. ambassador to India who were conveying messages from the Biden administration that India should buy Russian oil in order to stabilize the prices and prevent a global shock in the oil prices, because India is the third largest consumer and about 86% of its oil is bought from the global market. So, when it suited the U.S., of course, the current administration can always lay the blame at the doors of the Biden administration, having said that, please buy Russian oil. But the other point I wanted to emphasize is that India didn't buy Russian oil to favor Russia. It bought it because it was getting a discount. And for a nation of 1.4 billion people, the energy needs are enormous. So you try to economize on your purchases as much as possible without cutting down on the volumes. You buy it from the cheapest source. If the U.S. gives it to India at a rate lower, landed cost in India at a rate lower than Russia, we will buy from the U.S. Even now we are buying, but we will buy in large quantities. We are agnostic about the source of energy, whether it is Russia, the Saudi Arabians, or other countries in the Middle East, or the US. We will buy from anybody who offers us the best deal.
You are India's ambassador to the WTO. What do you make of the secondary tariffs? Are they legal? Is it something that you can contest at the WTO?
Well, even the first tranche of tariffs that he has, imposed is illegal. The 10% tariffs which he had imposed from April, that was illegal because they are all violative of the US's commitment and obligations to the WTO and to the other WTO members. So everything is a violation. But the second point that you raised about dispute, the US has single-handedly brought the dispute settlement process of the WTO to a complete standstill by not allowing fresh members to be selected for the 7-member permanent body of the appellate body of the WTO. And since 2019, it has had no members. So there is no recourse.
So would you say that the US has killed?
Sorry?
Would you say that the US has killed the WTO? Has it killed global trade? Is that a...
No, I wouldn't say that. The US has, only, I think, prevented the WTO dispute settlement system from functioning. But it is taking part in the negotiations. It is still invested in the WTO.
What are you most concerned about when it comes to global trade, which seems to be breaking down right now?
Yes, the first thing is that the US, the major European countries, and India, they came together during the Bretton Woods conference to think of 3 bodies, the IMF, the World Bank, and an international trade organization, which gave rise to the GATT in 1948. And subsequently, in 1995, it gave birth to the WTO in a much with a much broader framework and responsibilities. Now, the US has always believed, especially after the bloody war across the Atlantic on trade issues in the 30s, the Smoot-Hawley Act, there was competitive tariff raising from both sides of the Atlantic, and it led to about 1/3 or 1/4 of the GDPs of both sides coming down because of the tariff war. So at that point of time, the wisdom was that you must have a rules-based trading order, and it should be negotiated. And that is what we are all invested in. There are 160-odd members of the WTO. The US is the leading member and the leading contributor to the WTO. Of course, its contributions have been stalled at the moment.
Ambassador, it's been great having you on the show. Jayant Dasgupta, former Indian ambassador to the World Trade Organization. And for more insights on Indian trade, subscribers can join in a live Q&A with our panel of Bloomberg experts. Log on to Bloomberg.com at the times listed on your screen to participate. And we'll leave you with a look at Mumbai as President Trump's tariffs are about to kick in, including a 25% rate on Indian goods. Trump also set to double that number to 50% for India in about 3 weeks. That is it for Insight this